Ira Epstein of Linn Associates with your morning flash update for this Wednesday, the first day of April, April Fool's Day, and this is 2020, time about 9:16 a.m. Central Time. Well, as you can see, the stock market took a big beating on the opening. It's gotten a bounce since then. You know, these bounces are insane when you're talking 300-point bounces, but that's what you've gotten. The metal market, gold dropped and has been basically fairly stable. Silver market down a little bit. Copper really gets smashed today. And that's because you're starting to see a number of the data come in on manufacturing. It's terrible in Europe, it's terrible in the US, and that's no surprise. On the energy market, still no solution in sight. And you can see your Brent is down $1.20, the crude is down 46. When we step over and look at the grain markets, they're all sharply lower today. I don't know if that was a delayed reaction to yesterday and the market got a chance to think about the ending stocks and the acreage reports. So when I put it all together, what do we have? Well, if we take a look at the data, when you go back and you look at March, the average percentage change was 5%. Wow. That's the most since the Great Depression. So when I've been telling my clientele, you got to stay away from that because catching those moves very, very difficult. And if you're even remotely wrong, you're not out a little bit, you're out a lot. So that was rough. ADP data, this can't be right. They're only down 27,000 when the market expected 5 times that amount. Something's not right there. Construction spending data, February down 1.3, they expected 0.7 up, so you can see that that is falling. Even though the government and other parts of the world are all saying in the US and elsewhere, we've got to keep construction going in some manner, I don't know. The ISM manufacturing data, this is where you start seeing the fall, 49.1. The good news is the market expected 44.5, but it is still in contraction. Any number under 50 is contraction. Last month it was 50.1. That's the best number. When you start looking at manufacturing prices, new orders, and the employment, that's all weaker. The mortgage index, people are still going in and they're doing those mortgages. They have not changed in any manner at all. The Eurozone data, we'll go up here to the manufacturing. 44.5 versus a forecast of 48. German manufacturing, because this is really, the heart of the European Union, 45.4, in line with forecast, but again below the earlier ones. As you can see in the background, you're hearing other noise from my other charting service. Today, what we're going to have for you at the end is we are going to put out, at least I'm going to record for you, a special report on stock indices on Fibonacci numbers, where the market was on this break, the bounce, and where we're at. Look for that at the end of the day. Go to our website, www.iraepstein.com, under research, but at the end of the day. I'm Ira. Sorry about that background noise. You have a good day.